We shall commence this module by discussing about natural environment. Every economy uses natural environment for its economic activities, but while accounting, the inputs from the environment until recently have been considered free. Concerns related to environmental degradation and resource depletion are reflected in the concept of sustainable development, and hence environmental inputs must be accounted for in monetary terms along with conventional accounting. Both economic accounts and environmental statistics have their own conventions and classifications, hence have developed as an independent area. After studying this module, you shall be able to understand environmental accounting and the system of national accounts, understand the SEEA Central Framework, and understand the basic structure of SEEA, which is System of Integrated Environment and Economic Accounts. Let us now discuss the environmental accounts and the system of national accounts. System of national accounts is referred to an accounting framework for measuring the economic activities of production, consumption and accumulation of wealth in an economy during a period of time. It was first introduced by the United Nations in 1953 and is now followed by almost all countries around the world to measure indicators such as net national product, NNP, gross domestic product GDP and gross savings, etc. System of national account SNA has long been accepted an internationally agreed accounting system for monetary flows in the economy. The SNA provides a comprehensive conceptual and accounting framework for analyzing and evaluating the performance of an economy. It also provides a structure for addressing emerging concerns relating to determinants of economic growth and their links to different sectors of the economy. An internationally recognized standard like SNA facilitates credibility and comparability. Hence, there is a need to establish internationally accepted system of environmental accounting as well. System of Integrated Environmental and Economic Accounts SEEA has been developed in consistency with the SNA because effective environmental policies can only be articulated and implemented with an economic setup. Integrated economic and environmental accounts thus seem the preferred manner to ensure amalgamation of both economic and environmental policies. The SEEA sets out to expand the view of the economy by considering the interaction between it and the environment. The SNA considers both values at a point in time, that is stocks, and the changes in these values over time, that is flows. It also takes into consideration stocks and flows but measures them in physical terms as well as with values placed on them. In order to understand this integrated system, one must examine flows within and between the economic and environmental spheres in physical terms. First, the interaction between economy and environment. The physical or monetary boundary between the economy and environment is hard to establish. Hence, it becomes important to understand the flows within the economy, flows within the environment, and the interactions between the economy and the environment both backward and forward. Circular flow within the economy. The flow can be understood in terms of economic activities that use materials, land, energy or human skills to produce goods and services that can be exchanged for money or for other commodities, including the use of these commodities by their final purchaser. This is sometimes portrayed as the circular flow of income, whereby income is generated by individuals providing labor to enterprises, receiving compensation for their employment in return, and then spending their income to purchase the goods and services which their labor has helped to create. This diagram will give you a very simple model of economy. There are two decision makers in the model, household and firms. There are two markets, the market for goods and services and the market for factors of production. Firms are the sellers in the market for goods and services and the buyers in the market for factors of production. How households are buyers in the market for goods and services and sellers in the market for factor of production. The inner loop represents the flows in inputs and outputs between households and firms. The outer loop represents the flows of dollars between households and firms. Now we move on to flows within the environment. The environment envelopes white spaces and there are flows between one place to the other. These flows are not only confined to national boundaries, but they travel to the rest of the world. Flows down the water courses and air currents are two obvious means of transporting residuals from one area to another. All flows within the environment should also be recorded along with flows in the economy to complete the picture. For simplicity, we assume that the flows accounted on national level are of primary interest, and so there is no provision for recording these flows within the rest of the world. Now moving on to discuss the SEEA framework. The accounting rules of SNA are adopted for coming up with the SEEA central framework. Economic activity involves production and import of goods and services that are consumed by households, enterprises or government, saved for future use or exported to the rest of the world. Thus, the SEEA framework consists of three parts. First, physical flows of materials and energy within the economy and between the economy and the environment. Second, economic activity and transactions related to the environment. And third, stocks of environmental assets and changes in these stocks. SEEA lays emphasis on the following flows of interest. Products refer to flows of goods and services within national economy and between the rest of the world. Natural resources flow covers various minerals, energy and biological resources. Ecosystem inputs cover soil, climate, water, diversity of plants and various physical and chemical factors that promote sustainability and growth on earth. Residuals refers to solid, liquid and gaseous waste. They are undesired or subsidiary outputs from the economy which have nil economic value and hence may be disposed in the environment, recycled or stored within the economy. Accounts for products, natural resources, ecosystem inputs and residuals are merged to arrive at physical flow accounts. It is important to understand that these flows between economy and environment within the national territory. However, it is also important to understand the flows between the nation and the rest of the world. The figure in its different quadrants reflects how each element of physical flow account has an implication for both national economy and the rest of the world. Now we come to the basic structure of SEEA. This accounts lay focus on vital components of the environment used by enterprises and households for the benefits of humanity. In addition to the measurement of the stocks of environmental assets and flows between the environment and the economy, the central framework records flows associated with economic activities related to the environment. Examples of economic activity related to the environment include expenditures on environmental protection and resource management and the production of environmental goods and services such as taxes, subsidies, grants and rents. Using the measurement framework of the SNA, economic activities undertaken for environmental purposes are also accounted. Now, if you look at this table which covers the conventional SNA aggregates, KO with the subscript P.EC is the value of stocks of human made or produced capital, and KO with the subscript NP into EC is the value of stocks of natural resources like oil, gas, cultivated forests and so on, and they both are shown in row 1. In row 2 records total supply comprising domestic production P, that is capital P, and imports capital M. Row 3 records economic uses of total supply. See, a part of supply is used in further production which is given by CI, and the balance is either exported, which is given by capital X, consumed by households or government, which is capital C, or invested, IG. Column 1 shows the cost structure of domestic production capital P, comprising the cost of goods and services used in production, which is CI, comma, the cost of consumption of fixed human-made capital CFC, and balancing value added or net domestic product NDP. Now you note that NDP plus CFC is equal to gross domestic product GDP. Now the entries in column 4, if you concentrate, they are the consumption of fixed capital, which appears as a negative item, and when this is deducted from the gross investment IG, we obtain net investment I. Row 5 gives the national accounts identity, which is NDP equal to export minus import plus consumption and plus investment. Row 9th and 10th include various changes that affect the stock of produced and non-produced assets, such as adjustments to account for changes in prices of assets, destruction of assets due to natural disaster, and so on. For produced economic assets, opening stocks, which is KO with the subscript P.EC plus net investment, which is I, plus or minus adjustments like REV to the subscript of P.EC and VOL to the subscript of P.EC gives closing accounts. K1 P.EC or the opening accounts in the next accounting period. For non-produced economic assets, the entries are REV to the subscript of NP.EC and VOL to the subscript of NP.EC, which of course are the synonym for non-produced economic assets, denote corresponding adjustments to opening stocks, KO, non-produced economic capital, resulting in closing stocks K1 non-produced economic capital. VOL, non-produced economic capital, reflects other changes in the volume of assets like changes in known economic reserves or natural assets. Now, environmental accounts are incorporated in a way shown in the non-shaded part of the table. They are usually expressed in physical or monetary units or both. These environmental flows may be viewed as supplementary to system of national accounts and are expressed in physical units. However, if they are expressed in monetary units, one can obtain environmentally adjusted measures of domestic product. To see how, natural capital such as air, surface, water, cultivated land, forest, etc. are not classified as economic in nature as their use does not involve transactions in market or quasi-markets. All such entries are made in additional column 6. The additional row 6 records the use or consumption of non-produced natural assets given by use subscript NP. This reflects the degradation of natural capital, which is similar to CFC for human-made capital. Use subscript NP itself compromises of use USE subscript NP.EC and USE subscript NP.ENP, that means non-produced environmental asset. The former suggests the depletion of economic natural assets such as mineral, forest, subsoil, etc., while the later covers the human-induced degradation of other natural assets such as air, water and soil pollution and so on. Hence, they are entered in negative signs in column 5th and 6th, thereby indicating reduction of stocks of natural assets. Row 7th records the transfer of assets from non-economic to the economic category. For example, improved techniques of extraction, exploration have led to better prospects of recovering oil. Such entry would appear as a positive entry in column 5 and as an equal but negative entry in column 6. Thus, by construction, the entries in this row will sum to 0. Row 7 records environmentally adjusted accounts. In column 1, when we deduct USE NP from NDP, we get EDP, which is environmentally adjusted domestic product, which reflects the concept of sustainable income. Moving on to column 4 to 6, the concept of net accumulation is introduced. For produced asset, it is the same as net capital formation such that A to the subscript P.EC is equal to I. However, for non-produced economic assets, net accumulation is the sum of degradation of USENP.EC and increase in economic reserves given by INP.EC. Hence, ANP.EC can be positive or negative. Net accumulation of other non-produced natural assets, which is ANP.ENB, is also negative. Now, to sum up, the accounting identity between net production and expenditure noted above becomes ADP is equal to export minus import plus consumption plus AP.EC plus ANP.EC minus ANP.ENB, the last two terms within bracket. Now, since APEC is equal to I, we can rewrite that ADP is equal to NDP plus the two terms in the bracket, which is ANP.EC minus ANP.ENB. And also because INP.EC and minus INP.ENB cancel out each other, the term inside the bracket is equal to minus USC to the subscript NP, which is the same as the difference between NDP and EDP, and hence the identity gets proved. Finally, we will summarize what we have discussed in this module. The SEEA linked levels of economic activity with changes in environment. Monetization of environmental changes may further help in modifying conventional S&A components or aggregates to incorporate the use of environmental assets. SEEA is considered as a satellite account and offer a number of obvious merits. It integrates environmental and economic accounts while ensuring consistency in national accounts following conventional S&A definitions. Therefore, obtaining a comprehensive coverage of environmental assets is fairly less important in compilation of integrated accounts. Valuation of depletion of environmental resources like oil and gas, minerals, etc. is difficult to value for the purpose of measurement of sustainable income. Once globally acceptable methods of valuation are developed, these satellite accounts can be used for wider coverage.